Okay, let's unpack this. We've all heard the buzz about generative AI, you know, ChatGPT, DALL-E, all the amazing things it can do is reshaping industries we never even imagined.
It really is popping up everywhere.
Totally. But what about sectors that feel, well, a little more traditional, maybe a bit more grounded in human connection? What about banking?
Ah, banking, yes.
And I'm not just talking about the sprawling multinational giants here. I mean, the regional and community banks, the ones that are, the bedrock of so many local economies.
The ones people often feel a real connection with.
Exactly. And you might be wondering, how can a local bank focused on those personal relationships, knowing your name, how can they possibly compete in this high-tech world?
Yeah, it seems like a mismatch, doesn't it?
It does. Are they simply out-resourced by the sheer scale of investment from the behemoths?
That's the common assumption.
What we're diving into today is exactly that question. How regional banks can leverage generative AI. But crucially, not just to mimic their larger rivals, but actually to strategically amplify their unique foundational strengths.
We're talking about deepening those community ties and making truly personalized customer relationships even stronger. This isn't just about buzzwords. It's really about a strategic blueprint for, well, tangible returns and a sustainable competitive edge, especially in an industry that our research calls undergoing a seismic technological shift.
That's a powerful framing, and you've really hit on the core paradox there. For regional banks, GenAI isn't just about playing catch-up. Not at all.
Right.
It's actually about strategically outthinking competitors. It's using these precision tools to sharpen their unique value proposition, to truly deliver on that promise of being a community partner.
Okay.
So our goal in this deep dive is to give you a really clear understanding of where GenAI can genuinely make a difference, hopefully providing some of those aha moments about how cutting-edge technology can actually enhance human connection, not diminish it.
Enhance, not replace. I like that. Yeah. Exactly. We'll explore the top 5 high-impact use cases, look at a practical roadmap for adoption, and crucially, discuss how to navigate the challenges that inevitably come with wielding such powerful technology.
Sounds good. Let's get into it.
Let's do it, Poof. The generative AI imperative for regional banking. Humanity at scale.
So let's start with the big picture. What does all this AI buzz really mean for our local banks? They're facing a pretty intense squeeze right now, aren't they?
They really are. It's coming from 2 directions.
Yeah. On one side, you've got these super agile fintech firms. They're unencumbered by old systems, constantly innovating, capturing market share with these sleek digital-first approaches.
Right. They move fast, no baggage.
And then on the other side, you have the massive national and multinational banks pouring literally billions into these huge enterprise-wide AI initiatives.
The scale is just immense.
It really sounds like a dual-front challenge, as our research puts it. It feels like they're caught in the middle.
That's a very accurate description.
So for these regional banks, inaction. Well, it's just not an option, right? But at the same time, trying to outspend a global institution on AI investment, that's also untenable.
Absolutely impossible, yeah.
So if it's not about competing on the sheer scale of investment, what's the game plan? How do they navigate this?
That is the million-dollar question, isn't it? It really raises that important point.
Yeah.
How do you compete when you don't have the same resources as, say, a JP Morgan Chase or a MasterCard?
Right.
For decades, the traditional answer for regional banks has always been that high-touch model. Those personal relationships, that invaluable deep community knowledge, the trust they build over years, sometimes generations, with their clientele.
Knowing your banker kind of feel.
Exactly. Now, what's fascinating here, and something our sources really highlight beautifully, is that GenAI doesn't have to erode this unique differentiator. Not at all.
Okay, interesting.
In fact, it allows for its evolution into something potentially even more powerful. A high-tech, high-touch paradigm.
Top-tech, high-touch.
Yes. It's what one source eloquently calls delivering humanity at scale.
Humanity at scale. I like the sound of that. How does that work in practice?
Well, think about it. GenAI excels at automating those mundane, repetitive, time-consuming tasks that currently eat up a huge chunk of a bank employee's day.
Like what kind of tasks?
Oh, endless data entry, summarizing complex documents, generating routine reports, or even just searching through vast internal knowledge bases for specific information or procedures.
Stuff that takes time but doesn't necessarily build relationships.
Precisely. So by offloading these tasks to intelligent systems, regional banks can free up their most valuable asset, their people, to focus on genuine value creation.
More face time, less paperwork time.
Exactly. It means more proactive client outreach, more time for those in-depth financial advisory conversations, more capacity for empathetic problem solving when things get tricky. AI-powered tools can handle thousands of routine customer queries simultaneously, 247, allowing human staff to dedicate their expertise to building deeper relationships and managing those truly complex customer needs that require judgment and empathy.
So the AI handles the simple stuff, humans handle the complex.
In essence, yes. It can even parse through disorganized or, emotionally charged customer complaints to quickly surface the core issues. This arms the human staff with the context they need to respond with genuine care and efficiency. So this technological augmentation truly enhances the human element rather than diminishing it. It's really about giving employees back their most precious commodity.
Time. Okay, now here's where it gets really interesting, this idea you mentioned, strategic inversion.
Ah, yes, the inversion.
Usually we think of AI adoption in banking as primarily a cost-cutting tool, right?
That's the standard narrative, yeah. Efficiency cost to income ratio.
Exactly. The prevailing story often centers on operational efficiency, improving the bottom line. But for regional banks, our research suggests it's about something, well, far more profound. It represents a strategic inversion of that typical AI narrative.
It's flipping the script.
Right. So while a large national bank might leverage the productivity gains from GenAI primarily to, say, reduce headcount and boost profits,
Which is often the path they take.
a regional bank can make a profoundly different choice. They can actually reinvest that time dividend they gain.
Reinvest it back into the relationship side of the business.
Precisely. Consider loan processing, for example. Our sources indicate that automation in this area can reduce processing time by as much as 85%. That's huge.
Massive efficiency gain.
And it can even cut the time required to draft a comprehensive credit memo from several hours down to mere minutes.
A task that eats up so much underwriter time.
So, for a large institution, this efficiency might translate directly to cost savings, maybe needing fewer loan officers. But for a regional bank, those saved hours aren't just a cost to be cut. They're a strategic asset to be redeployed.
A reinvestment opportunity.
Imagine Sarah, a loan officer at a community bank. She used to spend maybe a third of her day manually entering data, sifting through financial statements, preparing that credit memo.
The tedious part of the job.
Right. Now, with AI as her co-pilot, those tasks get done in a fraction of the time. So what does she do with those saved hours?
That's the key question.
She spends proportionally more time meeting with local small business owners. Maybe she attends their Chamber of Commerce meetings, really gets to understand their unique challenges, provides that proactive, tailored financial guidance.
Building that trust, that community connection.
Exactly. This creates this powerful, virtuous cycle. GenAI automates the low-value, high-volume back office and processing tasks, leading to significant efficiency gains. Instead of just banking those savings, the bank's leadership strategically reinvests this time dividend directly into high-value relationship-building activities.
Doubling down on their core strengths.
Right. It strengthens and scales the bank's core competitive differentiator, its personal touch and community connection, with technology becoming the engine that powers a more potent version of its traditional human-centric strategy.
So the ROI isn't just about the efficiency ratios on a spreadsheet.
No. It's also about deeper customer loyalty, gaining market share in those local niches, creating a more resilient business model that those larger competitors, frankly, just cannot easily replicate. It's using tech to be more human, not less. 2. Top 5 high-impact generative AI use cases for regional banks. That's a powerful vision, really powerful. And it makes so much sense when you frame it like that, as amplifying strengths rather than just plugging weaknesses.
It shifts the perspective completely.
So if a regional bank is listening right now, and they're feeling both excited but maybe also a little daunted by this whole transformation.
Which is perfectly understandable.
Yeah. Where do they start? What's the very first, most practical place they should begin putting this into practice? Our sources detail 5 high-impact use cases, and they seem to balance innovation with pragmatism. They even provide a priority order. So let's start with the one they call foundational.
That's a crucial question. And yes, this phased approach is absolutely critical for success. It's all about building confidence, demonstrating value incrementally, step by step.
Learning as you go.
Exactly. Ensuring that each step provides a solid footing for the next. You don't try to scale Mount Everest on your first hike, right?
Good analogy. Okay, so use case 1. Foundational. What is it, A? Use case 1, unlocking back office efficiency. Foundational start here.
All right, use case one. When we talk about starting somewhere, the strategic overview here is crystal clear. The lowest risk, highest return entry point for GenAI is through internal back office applications.
Okay, internal first. Why?
Well, think about augmenting employee productivity, streamlining how knowledge is shared internally, automating administrative tasks, even compliance reporting. The key reason to start here is that the reputational risk is significantly lower than with any customer-facing application.
Right, if it messes up internally, it's less public.
Exactly. You get immediate productivity gains, you learn how the tech works in your environment, and importantly, those cost savings you generate can then be recycled to fund future, perhaps more ambitious initiatives. It builds momentum.
Makes sense. Do we have examples of banks actually doing this?
We do. Some really compelling real-world examples. South State Bank, a strong regional player, provides a powerful case study. They developed an enterprise GenAI tool.
Sure.
But here's the crucial part. It was trained exclusively on their own internal documents, like their dense 400-page commercial loan policy and their comprehensive 600-page procedural manual.
So only its own stuff.
Precisely.
Yeah.
This created what they call a secure internal expert system. It gives employees instant, accurate answers to complex procedural questions.
Like an internal Google just for the bank's rules?
Kind of, yeah. Imagine a new teller needing to quickly understand how to reissue an ATM card, or a marketer needing to draft some copy that's perfectly aligned with specific bank policies. South State reported a 5 to 8x boost in productivity. Tasks that once took 15 minutes now take mere seconds. That's a game changer for daily operations.
Wow, 5 to 8 times faster.
It's significant. And it's not just them. Even a financial behemoth like Morgan Stanley uses an OpenAI-powered tool as a virtual expert for its 15,000 financial advisors, helping them synthesize vast amounts of market research and economic data instantly.
So it scales up and down.
Absolutely. Pilot studies have shown things like a 50% reduction in writing and summarization time for employees. Broader analysis suggests up to a 70% reduction in manual data entry costs for those really data-intensive processes.
That's real money.
And for a regional institution like Southwestern National Bank, they even used natural language capabilities to generate complex geographic loan concentration reports for OCC examiners in seconds, a task that previously took hours of tedious manual spreadsheet work.
Okay, so the benefits are clear. How does a regional bank actually implement this? What's the blueprint?
The blueprint is quite straightforward, actually. First, you target a high-paying, low-risk process within the back office. Find something that's currently slow, frustrating, or error-prone.
Like navigating complex rules.
Exactly. Navigating complex internal underwriting guidelines. One mortgage lender successfully transformed this with a custom GenAI Q&A knowledge base. Or maybe summarizing lengthy new regulatory proposals from agencies like the FDIC. Start small, focus on impact.
Okay, find the pain point. What's next?
Second, and this is absolutely critical, create a walled garden knowledge base.
Walled garden.
Yes, this means the GenAI model is deployed within a secure, private environment, often using something called retrieval augmented generation, or RA architecture.
Okay, RAG, what does that do?
It's crucial because it ensures the AI isn't just generating answers from its general internet-based knowledge. Instead, it's looking up specific, verified facts directly from your bank's own internal documents, then using those facts to give you accurate responses.
Ah, so it prevents it from just making stuff up, that hallucination thing.
Exactly. Grounds the AI in your bank's reality, preventing hallucination. Third, develop an intuitive interface, maybe a chat-based internal copilot to democratize that institutional knowledge. This speeds up employee onboarding and reduces the time senior staff spend answering routine questions.
Makes everyone smarter, faster. How do you measure if it's working?
Measuring success here is quite direct. The key performance indicators, the KPIs, revolve around tangible time savings.
Like hours saved.
Yep. How much employee time is saved on tasks like information retrieval or summarization? How quickly do new hires become competent in their roles? You look at the employee adoption rate and their satisfaction with the tool. And of course, you constantly monitor the accuracy of the AI-generated content.
And the ROI, the return on investment.
It comes from direct productivity gains. Just calculate hours, saved multiplied by employee cost. Plus, cost avoidance, maybe less reliance on external consultants or lower training expenses. It's about immediately impacting the bottom line and, crucially, freeing up that valuable human capital for higher value work.
Got it. Foundational, internal, measurable wins first. B, use case 2. Fortifying defenses with intelligent fraud detection and risk mitigation. Strategic phase 12.
Okay, moving on to use case number 2. This one is a bit more strategic, perhaps phase 1 or 2, but still incredibly high impact. Fortifying defenses with intelligent fraud detection and risk mitigation.
Ah, fraud. Always a huge issue for banks.
Huge. And the strategic overview here is stark. Traditional rule-based fraud systems.
Right.
They're just not cutting it anymore against today's sophisticated, often AI-driven financial crime.
Why not? What's wrong with the old ways?
Well, they're relatively slow. They generate way too many false positives,
Yeah.
flagging legitimate transactions, which really frustrates good customers.
Yeah, that's annoying.
Right. And frankly, they just can't adapt quickly enough to new attack vectors that criminals are constantly developing.
So the bad guys are using AI too.
Increasingly, yes. So what GenAI and related AI bring to the table is the ability to analyze vast, complex datasets in real time to find subtle, hidden patterns indicative of fraud that those simpler rule-based systems would simply miss.
Seeing connections others can't.
Exactly. This is absolutely mission critical for a regional bank whose reputation is fundamentally built on trust and security. A single major fraud incident can cause immense, lasting damage.
Definitely. So does this actually work better? What's the impact?
The proven impact is dramatic.
Huh?
AI-powered systems are showing anywhere from a 20% to an astonishing 300% improvement in fraud detection rates compared to legacy systems.
Wow, 300%.
It can be that significant in some scenarios. And critically, they also achieve over an 85% reduction in false positives.
That's huge for customer experience. Less friction.
Massive. It prevents legitimate transactions from being blocked. They've even doubled the detection speed for compromised cards in some cases. Secure Bank, for instance, saw a remarkable 50% reduction in fraudulent activities in the first year after implementing a GenAI-based system. They credited the system's adaptability to evolving threats.
That's a big drop.
And it's not just hypothetical. Industry giants like JPMorgan Chase are using large language models, LLMs, to scan emails for potential fraud attempts. MasterCard analyzes an astounding 125 billion transactions annually using AI.
Okay, but those are giants. Can regional banks realistically do this?
Yes, absolutely. It's not just the giants. Regional players are seeing significant benefits too. Eastern Bank reported a significant drop in fraud losses and a 67% decrease in false positives after adopting AI. That clearly demonstrates the viability for regional institutions. Regions Bank actively uses its own AI models to continuously learn from transaction patterns, making their systems smarter every single day.
Okay, that's encouraging. So how does a regional bank implement this? It sounds complex.
It is complex, which is why the implementation blueprint here leans heavily on strategic partnership. First step, though, is internal. You must unify your data sources.
Break down those silos again?
You got it. Transactions, login attempts, behavioral biometrics like how someone types or moves a mouse, customer service interactions, everything needs to feed into the system for a holistic view of activity.
Get the full picture? Then what?
Second, and critically, partner with a reputable fintech vendor specializing in AI fraud detection. Rigorous due diligence is absolutely vital here.
What should they look for in a partner?
Focus on model transparency. You need to understand how it works. Avoid black box models.
Yeah.
Robust security protocols are non-negotiable, and seamless integration capabilities with your existing banking systems are key.
Okay, partnership. What else?
Third, leverage synthetic data generation with GenAI. This is a real game changer.
We mentioned that before. How does it help with fraud?
You can create artificial data sets that perfectly mimic new emerging fraud tactics. Think sophisticated phishing scams or synthetic identity fraud. You use this fake data to train and stress test your models without ever using sensitive customer data. It allows you to simulate the future of fraud safely.
Prepare for attacks you haven't even seen yet. Smart.
Exactly. And finally, implement a human-in-the-loop or HITL workflow. This is essential.
Human oversight again.
Always for critical functions. The AI flags suspicious transactions, but it's a human expert who makes the final review and decision. This combines the AI's speed and pattern recognition with human judgment and intuition. And crucially, the analyst's decisions then provide continuous feedback, constantly improving the AI model over time. It learns from the experts.
Makes sense. How do you measure success here?
Measuring success is very direct in fraud detection. Key performance indicators include the fraud detection rate, obviously, the false positive rate lower is better, the total financial value of fraud prevented, and the average time it takes to detect and resolve fraud cases.
Pretty clear metrics.
Very clear. And the return on investment is immediate and tangible. Direct reduction in financial losses due to fraud, reduced operational costs from fewer manual reviews of those pesky false positives, and significantly enhanced customer trust and retention because you're not blocking their valid transactions nearly as often. It protects the bank's financial health and its reputation. C. Use case 3. Automated loan origination and underwriting. Strategic phase 2.
Okay, use case 3. This one feels like it hits right at the core of banking. Lending. That's the main revenue engine for nearly every regional bank, right?
Absolutely. Lending is fundamental.
But traditionally, these loan processes, they're known for being slow, paper-intensive, costly, and let's be honest, the customer experience can be pretty frustrating sometimes.
It definitely can be. Lots of waiting, lots of paperwork.
So how do GenAI and other AI tools fundamentally re-engineer this? How do they accelerate the whole value chain? And you mentioned something called financial spreading earlier. What exactly is that in this context?
Right, this is truly where we see AI impacting the bank's top line and its competitive stance directly. The strategic objective is pretty profound: to process more loans more quickly and with greater consistency.
Which means happier borrowers and more business.
Exactly. It directly improves the borrower experience and helps capture crucial market share. And the results we're seeing are transformative. For instance, Metro Credit Union, by automating elements of their loan processing, reduced their application processing time by a remarkable 40%.
40% faster.
And at the same time, they decreased rejection rates by 25%. This suggests not just speed, but also more accurate and efficient decision-making.
Better decisions faster.
Correct. Across the sector, regional banks adopting automation in lending functions are seeing an average 85% reduction in overall processing time. That's immense. Finland's S-Bank successfully uses AI for faster, more accurate credit scoring.
So it's happening globally. Now, about that financial spreading.
Yes, financial spreading. Essentially, it's the process of taking a company's raw financial statements, like their income statements, balance sheets, and reorganizing all that data into a standardized format that the bank uses for deep analysis.
So standardizing the numbers?
Pretty much. This used to be an incredibly manual, tedious, and time-consuming task for underwriters. Hours spent punching numbers into templates.
Sounds painful.
It was. GenAI can now automate this entirely. It can also perform sophisticated cash flow analysis based on that data, and even assist in things like collateral valuation. And perhaps most notably, it can draft a comprehensive first version of the credit memo in minutes, not hours.
Cutting out a huge chunk of manual work.
A huge chunk. That memo compilation takes significant time for a loan officer.
Okay, so the potential is clear. What's an implementation blueprint look like for a regional bank wanting to automate lending?
It involves a step-by-step integration into their existing lending workflow. You don't rip and replace everything day one.
Phased approach again.
Always. First, you need to digitize and automate the front end, the document intake part. This means deploying AI-powered tools using optical character recognition, OCR, and intelligent document recognition, IDR.
Reading the documents automatically.
Yes. They automatically extract, classify, and validate information from all those diverse loan application documents, pay stubs, tax records, bank statements, you name it. This eliminates manual data entry right at the start and speeds up the initial stages dramatically.
Step 1, kill the manual data entry. What's step 2?
Step 2, deploy an underwriting co-pilot. This AI tool acts as a powerful assistant to your human underwriters.
An assistant, not a replacement.
Exactly. Based on the bank's predefined credit policy, the AI co-pilot automates those time-consuming analytical tasks we talked about. It does the financial spreading, calculates key ratios like debt service coverage and leverage, analyzes historical cash flow, and generates a preliminary risk assessment summary.
So it does the heavy lifting on the numbers.
Right. This frees the human underwriter to focus on their real expertise, making the final credit judgment, handling exceptions or unusual circumstances, and assessing those qualitative factors like management quality or local market conditions that only a human can truly grasp.
Judgment and nuance remain human. Step 3.
Step 3, automate credit memo generation. Once the underwriter makes the decision, GenAI can automatically generate the first draft of that credit memorandum.
Yep.
It synthesizes all the extracted and analyzed data into the bank's standard template.
Creates the first draft quickly.
Very quickly. The underwriter then reviews, edits, adds their qualitative insights, and finalizes it. This saves hours of repetitive writing.
Okay, and step 4?
Step 4, prioritize deep integration. This is crucial. The chosen AI platform must integrate seamlessly with the bank's existing loan origination systems, or LOS, and its core banking platforms.
Why is that so important?
To ensure smooth, uninterrupted data flow. You don't want people manually re-entering data between systems. That defeats the purpose and introduces errors. Everything needs to talk to each other.
Got it. So how do you measure the impact on the lending business?
It's highly quantifiable. Key performance indicators include the average time to decision, that's from application submission to approval, and time to cash, the time until the funds are actually dispersed to the borrower. Speed matters.
Faster money makes happy customers.
Absolutely.
Oh.
We also look at loan officer productivity, measured perhaps in applications processed per officer per month. We track the reduction in manual data entry errors, quality is key, and importantly, the application abandonment rate.
People giving up because it takes too long.
Exactly. A lower abandonment rate clearly indicates a better, faster customer experience.
And the ROI here.
It's driven by increased revenue from higher loan volume. You can process more deals. Significant operational efficiency gains from fewer underwriting and processing hours per loan, and potentially lower default rates down the line due to more consistent and data-driven risk analysis. One source even noted a remarkable 67% reduction in emails to underwriters as a powerful proxy for efficiency, just less back and forth needed.
Fewer interruptions, more focus. Makes sense. D, use case 4. Revolutionizing customer engagement and relationship management. Strategic phase 23. Right, use case 4. This one feels like such a natural fit for regional banks, given that core focus they have on personalized service and those deep community ties.
It really does align with their strengths.
But providing that kind of 247 service or incredibly responsive support, that can be incredibly costly, right? It must put a lot of pressure on smaller institutions.
It absolutely does. Staffing contact centers around the clock is expensive.
So how does GenAI help here? How can it enhance that human connection and manage costs effectively at the same time? That seems like the dream.
Exactly. You've hit on the core tension there. Customer service is a primary differentiator for regional banks. It's their competitive moat against the big impersonal guys. GenAI-powered conversational AI, I think chatbots, virtual assistants, is a powerful solution to this very problem.
Okay, chatbots, but better ones.
Much better ones, hopefully. The strategic goal is twofold. First, automate those high-volume, low-complexity inquiries to provide immediate round-the-clock support for simple questions.
Like, what are your hours? Or what's the current mortgage rate?
Precisely. And second, empower human agents with AI tools that enable them to resolve the more complex issues faster and more effectively when a customer does need human help.
So AI handles the routine, freeing up humans for the tough stuff.
You got it. Success here leads directly to higher first contact resolution rates, improved customer satisfaction scores, and a much more efficient allocation of those precious human resources.
Are banks actually seeing this work? Any examples?
Oh, definitely. We see strong examples already. Pentagon Federal Credit Union, PenFed, uses a chatbot that handles nearly 40,000 member interactions every single month.
40,000.
Yep. And it successfully resolves 20% of all those cases on the first contact without any human intervention needed.
That's a significant chunk off the agent's plates.
It is. It's significantly reduced pressure on their call center and cut the average time to answer a call to under 60 seconds. Think about that for a moment. Waiting on hold for less than a minute.
That's impressive. Any others?
Sure. Sumishin SBI Net Bank in Japan launched a GenAI chatbot called HelpBP. What's neat is it can maintain conversation context, it cites its sources, and crucially provides transparency by showing where its information came from. That's key for trust in a regulated industry.
Transparency is good.
Very. DNB, a major Nordic bank, adopted a chat-first strategy, and its virtual agent now successfully handles over 50% of all their incoming chat traffic.
Half of all chats handled by AI.
Yes. And importantly for regional players, BAC Community Bank in California seamlessly connects customers to their assigned personal banker after an initial AI interaction, if needed. It perfectly blends automation with their high-touch model. It's a fantastic example of that humanity at scale we talked about.
Nice integration. So how should a regional bank approach implementing this? It feels like putting AI directly in front of customers has risks.
It absolutely does. That's why a phased, risk-managed approach is essential for any customer-facing GenAI. You don't just switch it on for everyone overnight.
Okay, phase 1. Start small again.
Start internally again, actually, phase 1. Deploy a GenAI tool as a co-pilot just for your customer service agents.
So the agents use it, not the customers directly.
Not yet. This internal system can monitor calls and chats in real time and automatically surface relevant information from the bank's internal knowledge bases, product terms, compliance guidelines, procedures.
Like giving the agent superpowers.
Kind of. This carries minimal external risk, it significantly speeds up agent training, and it ensures more consistent service because everyone has the right info instantly.
Okay, phase 1 is internal agent support. Phase 2?
Phase 2 introduces the first customer-facing deployment, an FAQ chatbot. But, and this is critical, it's trained exclusively on publicly available FAQ data.
Back to the walled garden idea.
Exactly. Strictly limit the data the model can access. This significantly mitigates the risk of hallucination, the AI confidently stating incorrect information. It just handles routine queries like branch hours, maybe basic loan rates, simple verifiable stuff.
Low risk, high volume. Then phase 3.
Phase 3 evolves into a more integrated virtual assistant. This version can be carefully integrated with core banking systems to perform simple, authenticated actions like checking account balances or recent transactions.
It's getting more sophisticated.
Yes, but the absolutely critical feature here is a seamless and intelligent handoff to human agents with the full context provided. If the AI can't resolve an issue or the customer asks for a human.
So no repeating yourself to the human agent.
That's the goal. Imagine. The AI handles the first layer, gathers all the details, and if it needs to escalate, it hands the customer off to a human who already has all the context on their screen. Big win for customer experience. Oh, and multilingual capabilities can also be a key differentiator here for regional banks serving diverse communities.
Good point. How do you measure success with customer service AI?
Success involves clear metrics. Key performance indicators include the first contact resolution, FCR. Rate how many inquiries the chatbot fully resolves without needing a human.
How much does the AI actually handle?
Right. We also track average handle time, AHT, for the human agents, hopefully. It goes down for complex issues as they get better support. Customer satisfaction, CSA scores, and Net Promoter Score, NPS, are crucial. The chatbot containment rate, what percentage of interactions stay within the bot, and of course the reduction in routine call or chat volume hitting the human agents.
And the ROI?
Calculated from direct operational cost savings in the contact center, reduced agent hours needed for simple tasks, plus productivity gains for agents handling more complex issues efficiently. This can then be correlated with improved customer retention and maybe even increased product uptake because customers are happier. Use case 5, driving revenue with hyper-personalized marketing and product advisory, grows phase 3.
Okay, this last one, use case 5. This truly sounds like the ultimate promise of all this data we hear about in banking. Truly knowing your customer at scale, but hopefully in a way that feels personal and genuinely helpful, not creaky or intrusive.
That's the fine line to walk, absolutely. But yes, this is about moving beyond just transactions.
How does GenAI help achieve that personalized touch and ultimately drive revenue for a regional bank? That's the growth phase, right?
Exactly. This is phase 3, focused on growth. The goal is to transform the bank into a truly trusted financial partner. GenAI analyzes the full spectrum of customer data transactions, demographics, life stages inferred from activity, past interactions across all channels.
The whole picture.
The whole picture. It uses this to deliver highly targeted marketing messages, intelligent product recommendations, and truly proactive financial advice. This deepens relationships, increases the number of products or services a customer holds with the bank, what they call share of wallet, and builds a stronger defense against competitors trying to poach your best customers.
Okay, sounds powerful. Can you give some examples?
Sure. Predictive cross-selling is a prime one. GenAI can combine predictive analytics with behavioral clustering to identify the perfect moment for an offer.
Like knowing when someone might need something.
Precisely. For instance, it identifies a customer who's been saving diligently for a down payment. The system proactively flags this, maybe triggers an automated email with helpful mortgage information, or even alerts their relationship manager to reach out personally.
Timely and relevant.
Exactly. Or it notices a large, unusual deposit into an account and intelligently suggests scheduling an appointment with a wealth advisor. It makes these recommendations feel incredibly timely and genuinely helpful, not like random spam.
That makes a difference.
Right.
What about marketing content?
That's another powerful application. Hyperlocal content generation. For regional banks, which typically have smaller marketing teams compared to the giants.
Right, they can't have armies of writers.
Exactly. Creating a constant stream of fresh, relevant content tailored to their specific communities is a huge challenge. GenAI, trained carefully on the bank's brand voice and its local community knowledge, can draft blog posts, social media updates, or email campaigns tailored to very specific local nuances.
Like what?
Like Maybe specific financing options for first-time homebuyers in this particular county, referencing local landmarks or programs, or perhaps highlighting small business loans relevant to a burgeoning local startup scene you've identified. It makes the marketing feel much more connected.
Very cool. Any results from this kind of personalization?
We do see some examples. Wellflow Solutions, an advisory firm, implemented a GenAI platform to model highly personalized investment scenarios for clients, and they reported a direct 30% increase in client satisfaction ratings.
Better advice, happier clients.
And FinScore Global used GenAI trained on unconventional data sources like utility payments or rent history to assess credit risk for underserved populations. This resulted in a 40% increase in credit issuance to these previously overlooked segments, so AI can also foster greater financial inclusion.
That's a great outcome. So how does a bank implement this? It sounds data intensive.
It is. The implementation blueprint for hyper-personalized marketing is absolutely data first, and it's phased. Step 1. Establish a unified customer view.
There it is again, the foundation.
It's the non-negotiable foundation. You simply must break down those data silos, create a central data repository, sometimes called a customer data platform or CDP, combining information from your core banking system, transaction logs, CRM, digital platforms, call center notes, everything.
Get all the data in one place. Step 2.
Step 2. Start with segmentation and next best action models. The system should segment customers not just by simple demographics, but by their financial behaviors and inferred life stages. Think new parents, small business owners just starting out, individuals nearing retirement.
Deeper insights into who they are and what they need.
Exactly. Then a next best action model provides real-time suggestions to bankers or the marketing system on the most relevant product to offer or conversation topic to initiate during any interaction.
Guiding the conversation productively. Step 3.
Step 3. Deploy generative content for campaigns. Empower your marketing team with GenAI tools specifically designed for this. They can create multiple variations of ad copy, email subject lines, and calls to action, all tailored to those different customer segments.
Testing lots of variations easily.
Yes. This allows a small team to execute dozens, maybe even hundreds, of highly targeted micro-campaigns simultaneously, dramatically improving conversion rates without needing a massive budget increase.
More bang for the marketing buck. Okay, step 4.
Step 4. Empower bankers with proactive insights. This is the ultimate goal for relationship managers. Give them a GenAI-powered dashboard or integrate insights directly into their CRM.
What kind of insights?
Before a client meeting, this tool can provide a concise summary of recent customer activity, predict potential upcoming needs like high probability of needing a home equity line of credit in the next 6 months based on spending patterns, and maybe even generate relevant talking points or questions to ask.
Turning every interaction into a proactive advisory session.
That's the idea, transforming reactive service into truly proactive, valuable guidance.
How do you measure success for this kind of growth initiative?
It involves primarily revenue-focused metrics. Key performance indicators include marketing campaign conversion rates or people responding, the cross-sell ratio, how many products does the average customer hold with you, the product per customer ratio, customer lifetime value, or CLV, are your valuable customers staying longer and doing more business, and customer engagement with the personalized content, are they clicking, reading, responding.
And the ROI?
The return on investment is the direct increase in revenue from new sales attributed to these personalized campaigns and interactions, plus improved customer retention, which is hugely valuable, and higher marketing efficiency, achieving better results from the same or potentially even lower marketing spend because your targeting is so much smarter. 3. Strategic roadmap for GenAI adoption, a framework for regional bank leadership.
Okay, that's a really comprehensive breakdown of where to apply this technology, covering everything from the back office efficiency right through to that hyper-personalized customer engagement.
It covers a lot of ground.
But it's also clear, listening to this, that GenAI isn't just about picking the right tools off a shelf. It sounds like a profound business transformation.
It absolutely is. It touches everything.
So for the bank leaders listening, the CEOs, the board members, what are the core principles that should guide this journey? How do they move effectively from just initial exploration to creating real enterprise-wide value?
That's a critical question for leadership. It's not about isolated tech projects. It really requires a holistic strategic framework. Our sources suggest 4 core principles that, when followed, lay the groundwork for a successful and sustainable GenAI journey.
4 principles. Okay, what's the first one? Principle 1. Establish a centralized governance and ethical framework.
Principle number 1. Before a single model is deployed, certainly before anything touches a customer, a robust governance structure must be in place.
Governance first. Why so critical?
The complexity and the potential risks of AI, especially GenAI, demand a centralized and cross-functional approach to oversight. You can't have different departments just doing their own thing with this technology.
Makes sense. So what does that look like?
The first practical step is often to create an AI steering committee, or maybe a formal center of excellence, a COE. This group needs senior leaders from all the key areas: the business lines, IT, data analytics, risk management, compliance, legal. Everyone has a stake.
Get all the key players in the room. What does this committee do?
They're charged with defining the bank's overall AI vision, making sure that the use cases being developed actually align with strategic business goals, allocating resources effectively, and, most importantly, establishing explicit ethical guardrails within which all AI development and deployment must occur.
Ethical guardrails, like what specifically?
Well, they need to address critical areas head-on. For example, bias management is crucial. This means ensuring models are regularly audited for fairness and do not produce discriminatory outcomes, especially in sensitive areas like lending decisions or credit scoring.
Avoiding algorithmic bias.
Exactly. They must also demand transparency and explainability, particularly for any AI-assisted decision that impacts a customer. You need to be able to understand why the AI made a particular recommendation or decision, especially if, say, a loan application is denied. It can't just be a mysterious black box operation.
You need to be able to explain it.
You do. Furthermore, a human-in-the-loop, or HITL, approach must be mandated for all critical processes, ensuring AI serves as that co-pilot to support, not replace, expert human judgment. And finally, stringent data privacy and security protocols must be woven in from the start. Documenting everything AI-driven decisions, data sources used, model limitations is essential for building trust with both customers and regulators. This is fundamentally about responsible innovation, not just speed.
Okay, governance and ethics up front. Principle number 2. Principle 2. Build a data-ready infrastructure.
Principle 2. Build a data-ready infrastructure. We've touched on this, but it's worth emphasizing. GenAI models are incredibly powerful, but their output quality is entirely dependent on the quality, the accessibility, and the integrity of the data they are trained on.
Garbage in, garbage out still applies.
More than ever.
Yeah.
It's often said that a successful AI strategy is, first and foremost, a successful data strategy. Leadership must prioritize and fund initiatives aimed squarely at data hygiene and unification.
Cleaning up the data house.
Exactly. For many regional banks, this means finally tackling that long-standing challenge of data silos, where customer information is fragmented across different legacy systems that don't talk to each other.
That old problem.
It's a persistent one. Now, while a complete overhaul of the core banking system might not be immediately feasible or necessary,
That sounds expensive and disruptive.
it can be. But adopting more modern architectural approaches like data mesh or data lakehouses can allow the bank to create a unified data layer that works with existing fragmented sources. It makes the data accessible for AI models without requiring a full rip and replace. Think of them as clever ways to connect all your bank's different data sources, even the old ones, so that AI can easily access all the information it needs no matter where it originally lives.
Making the old systems play nice with the new tech.
Essentially, yes.
Yeah.
And a key component of a modern data infrastructure, especially for AI, is the ability to generate high-quality synthetic data.
We mentioned this for fraud and training.
Right. This Gen AI-powered technique creates artificial data sets that mimic the statistical properties of real customer data without containing any personally identifiable information. This capability is strategically vital.
Why so vital?
For two main reasons. First, it allows the bank to train and test AI models rigorously without ever exposing sensitive customer data, which is a huge privacy win. And second, it enables the creation of novel scenarios like simulating new types of sophisticated fraud attacks or unexpected market shocks to stress test the bank systems and models safely without risking real-world incidents. It lets you prepare for the unexpected.
Practice without risk. Okay, principle 3. See principle 3. Address the talent gap with a trifold strategy.
Principle 3. Address the talent gap with a trifold strategy. The scarcity of skilled AI talent is a significant hurdle for financial institutions of all sizes. One source we looked at indicated that 57% struggle with AI skill gaps.
More than half. That's a lot.
It is. Regional banks, which often can't compete on salary with tech giants or huge banks, need a really pragmatic, multi-pronged approach to build the necessary capabilities.
Okay, a trifold strategy. What are the 3 parts?
First, reskill existing employees. The primary focus here should not be on replacement, but on augmentation. empowering your current team.
Training your own people.
Exactly. The bank must identify how AI will change existing job roles. We talked about the loan officer using an AI assistant, the marketer using content generation tools, and invest in targeted training programs to reskill its current workforce. The goal isn't necessarily to turn everyone into an AI developer, but to create a workforce of highly capable AI users, people who know how to leverage the tools effectively in their jobs.
Makes sense. Second part.
Second, recruit strategically. While it might not be feasible or necessary to build a large in-house AI research team like a Google or a Chase, regional banks should recruit for a small number of key high-impact roles. Maybe a data scientist specifically focused on model validation and ensuring accuracy and fairness. Perhaps a prompt engineer who becomes an expert at getting the best results out of GenAI systems. Competition for this talent is intense, so the bank needs to offer a compelling value proposition. Maybe highlighting the opportunity to have a significant visible impact within a community-focused organization, rather than being a small cog in a giant machine.
Sell the mission. And the third part of the strategy.
Third, and for most regional banks, probably the most efficient path initially, partner intelligently.
Working with outside experts.
Yes, this involves collaborating strategically with established fintech vendors, specialized consultants, and technology providers who have proven secure solutions specifically for the banking industry. This strategy provides access to cutting-edge technology and deep expertise without the prohibitive cost and time required to build absolutely everything from scratch.
Leverage the ecosystem.
Precisely. But rigorous vendor due diligence is paramount here. You need to ensure security, compliance, reliability, and a strong cultural fit with any partner handling your data or core processes. Choose your partners wisely.
Okay, reskill, recruit selectively, partner smartly. That makes sense. Principle 4. Principle 4. A phased approach. From pilot to scale.
Principle 4. A phased approach. From pilot to scale. We keep coming back to this, but it's fundamental. A big bang approach to AI adoption, trying to do everything at once, is, quite frankly, often a recipe for failure, wasted investment, and organizational burnout.
Don't bite off more than you can chew.
Exactly. A disciplined, phased rollout allows the organization to learn, adapt, manage risk, and build momentum over time. We can break this into 3 distinct phases, aligning roughly with the use cases we discussed.
Okay, walk us through the phases.
Phase 1 is foundational. This typically might last the first 1 to 6 months. You begin with just 1 or 2 high-impact but internal back-office use cases, like that internal knowledge management tool we talked about, or maybe automating a specific compliance report.
Start safe. Start internal.
Right. The primary goals here are to secure a quick win, demonstrate tangible value to the organization, even if small initially, build foundational skills internally in data management and model oversight, and cultivate institutional confidence in the technology. It's about proving the concept in a low-risk environment and learning the ropes.
Build confidence. Phase 2.
Phase 2 is strategic. This might typically span from month 6 out to maybe 18 months. Leveraging the success, the learnings, and the confidence from Phase 1, you expand into mission-critical core processes. But always maintaining that human-in-the-loop oversight for critical decisions.
Okay, getting closer to the core business. Like what?
Prime candidates for this phase include deploying that fraud detection co-pilot we discussed, or the loan underwriting assistant. The goal here is to drive significant improvements in operational efficiency and risk reduction in the bank's core business lines, making a direct, measurable impact on how the bank operates day to day.
Bigger impact, still carefully managed. And Phase 3.
Finally, Phase 3 is growth. This typically starts around 18 months and continues onward. With a proven track record of managing internal AI systems effectively and having built trust and capability across the organization, the bank can now begin to confidently deploy more complex, often customer-facing applications.
This is where the hyper-personalization comes in.
Exactly. This phase includes launching those sophisticated personalized marketing engines and the more advanced virtual assistants that might integrate with core systems. The primary objective here is to directly leverage the capabilities built in the first 2 phases to drive top-line revenue growth and create a truly superior, differentiated customer experience, really delivering on that humanity at scale promise.
So each phase builds on the last.
Precisely. This phase roadmap isn't just a timeline, it's a strategy for building what you could call a self-reinforcing capability flywheel.
Flywheel.
Yeah. The efficiency gains and cost savings from the foundational back-office applications in Phase 1 generate the ROI and the data expertise required to de-risk and successfully implement the strategic core process improvements in Phase 2.
Okay, Phase 1 funds Phase 2.
And then the refined data structures, the better data quality, and the more sophisticated risk models developed in Phase 2 become the essential, trusted foundation upon which the accurate and reliable customer-facing applications of Phase 3 can be built. Attempting to launch complex customer-facing AI without this internal proving ground, without getting Phases 1 and 2 right first, that's a significant reputational risk.
You have to walk before you can run.
Absolutely. Each phase methodically builds the momentum, the funding, and the organizational capability needed for the next, dramatically increasing the probability of a successful, sustainable, enterprise-wide transformation. 4. Navigating the headwinds. Critical challenges and mitigation strategies.
That roadmap sounds incredibly promising, very logical. Building capabilities step by step makes a lot of sense. But, we're talking about powerful, transformative technology here. It's surely not without its pitfalls, right?
Oh, absolutely not. Smooth sailing is unlikely.
So what are the big risks? What are the major headwinds that regional banks really need to watch out for as they embark on this GenAI journey? And more importantly, how can they proactively tackle them?
That's the right question to ask. While the potential is genuinely transformative, the path is indeed laden with significant challenges. Proactive mitigation, thinking about these risks up front, is absolutely key to ensuring you get the value without unacceptable operational, reputational, or regulatory jeopardy.
Okay, what's challenge number one? Data security and privacy.
The most immediate, and arguably the most critical risk, is the potential exposure of sensitive customer data or proprietary bank information.
The nightmare scenario.
Exactly. Our sources are unequivocal on this. Using public consumer-grade GenAI tools like the free version of ChatGPT or similar platforms with any internal bank data poses an unacceptable security threat.
Why is that so risky?
Because that information can be inadvertently absorbed into the public model's training set, potentially exposing it later. A data breach involving an AI system, especially one handling customer financial data, could be catastrophic for a regional bank's reputation. It undermines the very trust they're built upon.
Could kill the bank, potentially. How do you mitigate that?
The mitigation strategies have to be strict and non-negotiable. First, a zero-tolerance policy must be established and rigorously enforced, strictly prohibiting employees from using any public GenAI tools with any non-public bank or customer data. Full stop.
Clear rules, no exceptions.
Absolutely. Second, all internal GenAI initiatives must be deployed within a secure walled garden environment. That means either on-premise infrastructure that the bank controls completely or through a trusted cloud vendor that guarantees complete data isolation and meets stringent security standards.
Keep your data locked down.
Tightly. And third, for model training and testing whenever possible, the bank should prioritize the use of those GenAI enablement platforms that can create high-fidelity synthetic data. As we discussed, this replaces confidential information while preserving its statistical characteristics, allowing for robust development without risking privacy. It's like practicing complex surgery on a highly realistic dummy before you operate on a real patient.
Practice safely. Okay, big risk number 2. B, accuracy, bias, and explainability.
Risk number 2 revolves around accuracy, bias, and explainability. GenAI models, as powerful as they are not infallible. They are prone to what the industry calls hallucinations.
Making things up confidently.
Exactly.
Yeah.
Generating confident-sounding but factually incorrect information. This is obviously a massive concern in a field like banking where accuracy is absolutely paramount. You can't have your AI telling customers the wrong balance or misstating loan terms.
No room for error there. What about bias?
That's the other major component here. If an AI model is trained on historical data that contains societal biases, which, let's be honest, a lot of historical financial data does reflect past biases.
Unfortunately, yeah.
Then the AI model can inadvertently learn, perpetuate, and even amplify those biases. This could lead to discriminatory outcomes in critical areas like lending decisions or even hiring algorithms. This is particularly concerning for regional banks, whose brand is often built on fairness and serving their entire diverse community.
Huge ethical and legal risks there. And explainability, the black box problem.
Right. That's the third leg of this stool. Often, the internal workings of complex AI models, especially deep learning models used in GenAI, are not easily understood even by the experts who build them. This black box problem makes it exceedingly difficult to explain why the AI made a particular adverse decision, like denying a loan application to a customer, or, importantly, to a regulator.
You need to be able to justify your decisions. How do you mitigate these tangled risks?
Mitigation requires a multi-layered approach. First, a robust, human-in-the-loop HITL system is arguably the single most effective safeguard for accuracy and bias. For any critical decision, the AI's output should be treated purely as a recommendation or a first draft for a human expert to review, validate, potentially correct, and ultimately approve. The human remains accountable.
Keep humans in charge of key decisions.
Always. Second, the bank must invest in explainable AI or XAI tools and techniques. These are designed to provide clearer audit trails and articulate the key factors that influence the model's output, helping to peek inside that black box.
Making the AI less mysterious.
Trying to, yes.
Oh.
Third, regular, rigorous auditing of all models specifically for fairness, bias, and performance drift is essential. Models aren't static, they need ongoing monitoring. And finally, maintain meticulous documentation of everything. The data sources used, the model architecture, the design decisions, the testing results. This ensures transparency and accountability. It's about building systems you can genuinely trust and rigorously defend if needed.
Okay, governance, explainability, human oversight. Next challenge. C, regulatory and compliance uncertainty.
Challenge number 3, regulatory and compliance uncertainty. This is a really significant one for banks, operating as they do in a heavily regulated industry.
The rules are still being written for AI.
Exactly. The legal and regulatory framework governing the use of AI in financial services is still very much in its nascent stages. It's evolving rapidly and often varies significantly across different jurisdictions, state, federal, international. This creates a challenging landscape of uncertainty for banks.
Hard to hit a moving target.
Very. Regulators globally are increasingly focused on issues like model risk management, ensuring models are sound and used appropriately, fairness, preventing discrimination, and transparency, being able to explain decisions. New guidelines and expectations are constantly emerging.
So how do banks navigate this uncertainty?
The best approach is proactive engagement, not just waiting for rules to be imposed. Regional banks should actively participate in industry associations and regulatory initiatives. Help shape sensible future standards for responsible AI use in banking. Get a seat at the table.
Be part of the conversation.
Right. Internally, all AI systems must be designed for transparency and auditability from day one. Assume regulators will eventually want to look under the hood, so build it that way from the start.
Designed for compliance up front.
Yes, and that phased adoption strategy we keep talking about. It provides a natural de-risking mechanism here too. By beginning with internal, non-customer-facing use cases, the bank can build its capabilities, its governance processes, and its understanding of the technology in a lower scrutiny environment before tackling higher-risk applications.
Learn in private before going public.
Essentially. And of course, it goes without saying, all AI deployments must be thoroughly vetted to ensure full compliance with existing data protection regulations like GDPR, CCPA, and other relevant privacy laws. That's table stakes. It's really about being ahead of the regulatory curve, anticipating requirements, not just reacting and playing catch-up with compliance later.
Makes sense. Final big challenge, DCost, ROI, and vendor management.
The final major challenge we'll highlight is cost, ROI, and vendor management. Let's be realistic. Implementing GenAI, even starting small, requires considerable upfront investment.
It's not free.
Definitely not. There are costs for the technology itself, potentially new talent, and crucially, getting that data infrastructure ready. And the financial return on investment, the ROI, can sometimes be difficult to quantify precisely, especially for benefits beyond pure cost cutting. It may also take several years to fully materialize, which can be a tough sell for leadership focused on quarterly results.
Patience is needed.
Yes, and realistic expectations. Research from Gartner actually predicts that a staggering 90% of enterprise GenAI deployments by 2025 will initially exceed their budgeted costs. This just highlights the financial complexities and the potential for unforeseen expenses.
Wow, 90% over budget. That's sobering. What about vendors?
That's the other side of this coin. Over-reliance on a single technology vendor, especially for core capabilities, can create significant strategic risks down the line.
Like what kind of risks?
Things like price gouging once you're locked in, platform dependency where you can't easily switch, or the vendor changing their strategy or even going out of business, it limits your flexibility.
Vendor lock-in. How do banks mitigate these financial and vendor risks?
First, regarding cost and ROI, bank leadership needs to look beyond simple, direct cost reduction when building the business case. The value proposition should absolutely include those second-order benefits. Things like improved productivity across multiple departments, enhanced strategic planning capabilities enabled by better insights, and crucially, the long-term value of increased customer retention and loyalty. Frame the investment more broadly.
Think strategically, not just tactically.
Precisely. The strategic roadmap should prioritize those use cases that can deliver quick, tangible, measurable wins early on. This helps build momentum, demonstrates value quickly, and can even help fund the longer-term, more complex initiatives. Use early savings to pay for later growth.
Build momentum with early wins. How about managing vendor risk?
To mitigate vendor risk, banks should, where feasible and sensible, pursue a multi-model and potentially a multi-cloud strategy. Don't put all your AI eggs in one vendor's basket.
Keep your options open.
Exactly. This avoids deep lock-in to a single proprietary ecosystem. As one senior JPMC executive was quoted saying about their AI strategy, the name of the game is diversification. This means having options, maintaining negotiating leverage, and building a more resilient and adaptable overall AI infrastructure for the long haul. The future of regional banking, a forward-thinking perspective on generative AI.
Okay, that's a lot to consider on the challenges front: security, bias, regulation, cost. But the mitigation strategies seem clear and achievable with careful planning. So, pulling back again as we look towards the horizon, what does this all mean for the fundamental future of regional banking? How will GenAI truly reshape it, not just incrementally, but maybe even change the very definition of what a regional bank is?
That's the really exciting part to contemplate. If we connect all these threads, the use cases, the roadmap, the challenges to the bigger picture, GenAI isn't just about incremental improvements or efficiencies. It really acts as a catalyst for a deeper, more fundamental evolution of the entire regional banking model. It heralds a significant shift in how these banks interact with their communities and, importantly, how their employees thrive within them.
An evolution, not just an upgrade. What's the first big shift you see? A, the shift from products to experiences.
The first major shift is from being product-centric to being experience-centric. For decades, banking has largely been structured around selling discrete products. You have a checking account, you get a mortgage, maybe an auto loan, these siloed products you purchase.
Transactional in a way.
Very transactional.
Yeah.
GenAI will profoundly accelerate this shift away from just selling these separate products towards delivering a continuous, proactive, and deeply personalized financial wellness experience.
Financial wellness experience. What does that mean?
Imagine the bank of the future, functioning less like a store selling products and more like a living ecosystem. It uses AI constantly in the background to analyze a customer's complete financial picture. In real time, their spending, saving, borrowing, investing, even maybe linking to external accounts with permission.
A holistic view.
Wow, a truly holistic view.
Yeah.
And it uses this view to provide forward-looking advice and guidance, not just on purely financial decisions, but maybe even on relevant lifestyle choices that have financial implications.
Like what?
Well, instead of waiting for a customer to realize they need a loan and then apply for it, the AI-powered bank anticipates the need. Maybe it sees spending patterns indicating a home renovation project is starting, or detects life events like a new baby being added to insurance, or notices a child is approaching college age based on linked savings accounts.
Seeing signs.
Right, and it proactively offers tailored solutions, perhaps drafting initial information packets about EOCs or 529 plans that perfectly align with that customer's unique situation and financial goals, maybe even suggesting optimal timing.
Moving from reactive to proactive.
Absolutely. This transition from being primarily a reactive transaction processor to becoming a proactive, trusted financial partner represents, I think, the single greatest opportunity for regional banks to solidify and deepen their role as essential community institutions. It moves them from being just a utility or a service provider to being an indispensable, deeply integrated part of a customer's life journey.
Hmm.
That builds incredible loyalty.
Wow, that's a big vision shift. What's the next transformation? B, the transformation of work.
The second major transformation is, of course, the transformation of work itself within the bank. The common narrative of AI leading to mass unemployment in banking is, frankly, overly simplistic and often quite misleading, especially for regional banks focused on relationships.
So AI isn't coming for everyone's jobs.
Not in the way people often fear. While certain highly routine, purely process-oriented tasks will certainly continue to be automated and probably should be.
The boring stuff.
The boring, repetitive stuff, yes. GenAI will primarily transform, not eliminate, the vast majority of job roles within the regional bank.
How will roles change?
The bank employee of the future, I believe, will be an AI-augmented advisor. Think about loan officers, wealth managers, even tellers, or universal bankers. They will increasingly be equipped with these powerful AI co-pilots we've been discussing.
The AI assistant again.
Right. It handles the time-consuming data analysis, the information retrieval, the administrative paperwork, the compliance checks in the background. Remember Sarah, our loan officer example? She used to spend hours on compliance checklists and manual data entry. Now her AI co-pilot handles much of that in minutes.
Freeing her up.
Exactly. Freeing her up to focus intensely on the uniquely human skills, building empathy and rapport, tackling complex, nuanced problem solving, providing strategic financial advice based on a deep understanding of the client's goals, and most importantly, building and nurturing those lasting personal relationships that are the true hallmark and competitive advantage of regional banking.
So value shifts from speed to insight and connection.
Precisely. The value of an employee will be measured less by their sheer processing speed or efficiency on routine tasks, and more by their ability to effectively leverage AI-driven insights to deliver truly superior empathetic service and build enduring customer trust. It's fundamentally about elevating human potential, not replacing it.
Using tech to make people better at the human parts of their jobs.
That's the goal and the opportunity.
Okay, final area of future transformation. C. New business models.
The third area is the potential for entirely new business models and innovative revenue streams enabled by AI. Beyond simply enhancing existing operations and relationships, this technology opens the door to creating value in ways that weren't previously feasible for regional banks.
Going beyond traditional banking.
Potentially, yes. By cleverly combining their deep, localized community knowledge, something the national giants often lack at a granular level with powerful AI analytics, regional banks can offer specialized services that larger players simply cannot easily replicate effectively at the local level.
Like what kind of new services?
Well, for example, imagine a regional bank launching a specialized small business CFO advisory service.
Acting like a CFO for local businesses.
Exactly. Using GenAI to analyze a local business's real-time cash flow data, with permission, of course, maybe inventory levels, sales trends, even local economic indicators. The bank could provide hyper-personalized, actionable advice on capital management, inventory optimization, expansion financing options, and operational efficiency improvements.
Very tailored advice.
Extremely tailored.
Yeah.
Imagine a local bakery owner, maybe worried about fluctuating ingredient costs or predicting staffing needs for the holiday season. Their regional bank's AI-powered advisory service could analyze commodity market trends, their own historical sales data, maybe even local event schedules or weather patterns to provide specific advice on optimal inventory levels, or when might be the best time to secure a short-term line of credit for expansion.
That goes way beyond just giving them a loan.
Way beyond. The bank becomes an indispensable strategic partner to the economic engines of its community, the small businesses. Not just a lender, but a trusted advisor deeply invested in their success. This creates entirely new, valuable services that only a truly local, yet technologically advanced bank could realistically offer. It cements its position not just as a financial institution, but as a genuine pillar of community prosperity and resilience. That's a powerful future vision.
Outro.
Wow.
Yep.
That was a truly deep dive. What an incredible journey through the potential and the challenges of generative AI, specifically for regional banks. We've seen how this technology can really reshape everything, from the hidden gears keeping your money safe, right through to making your actual banking experience feel more personal and proactive than maybe ever before. Indeed. We've explored how, by strategically adopting GenAI, not just chasing the hype, regional banks can really modernize their operations, significantly deepen their traditional competitive advantages, the trust, the community focus, and truly ensure their relevance and prosperity in an increasingly digital-first world. It really is about building a future where technology amplifies humanity, not replaces it.
Amplifying humanity. I really like that framing. So here's a provocative thought for you, our listener, to maybe chew on as we wrap up. Given everything we've discussed today about humanity at scale, what aspect of your own relationship with your bank, maybe it's a regional one, maybe not, do you think could be most enhanced by smart AI working thoughtfully behind the scenes? And perhaps more personally, thinking about that AI-augmented advisor we described, what kind of interaction like that would you actually be most excited to engage with? What kind of proactive help would feel truly valuable to you? Something to think about. Remember, as our research suggests, for regional banks navigating this era, the greatest risk isn't necessarily adopting the technology too quickly or too slowly. Perhaps the greatest risk is simply inaction.
Well said.
Thanks for diving deep with us today. We really hope this conversation has given you a shortcut to being well-informed on this important topic, and maybe even sparked some new ideas about the exciting future of finance potentially happening right there in your own community.